Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, October 17th, 2016. Kind of a nonchalant day today. Not a really whole lot to go over. One thing that I mentioned yesterday, I said, if the Bears can push it through this 21, 28, 21, 27 area, most likely that's going to be the earliest clue that we're taking these lows out. Now, it really, say the line in the sand, as I mentioned last night, is this 21-22, which is a 78% retracement. But the fact that we had, a big, huge part of this spike was done on a gap up, and then they lost that again. If these lows get taken out, I think that we could see a very, very quick move to the downside. But I'm leaving the door open for anything to happen. But it's just we didn't really have any kind of strength today after. Which typically in the past we did. So if you take a look at the 5-minute chart, what I want to do right now, I would say that the bulls need to push it. The earliest clue that they're going to try to mount something will be if they get it above this 21.33. If they do that, then there's going to be resistance right around this 21.39, and then in between, say this high right here, which is 21.42 and 21.44. 21.44 being the line in the sand that they want to defend. So I'd mentioned that we have the Fed meeting coming up. So I wouldn't be that surprised if all of a sudden we start to see them, play the games that they've been playing, and that's most likely making some type of another triangle, and that would be looking for a move to come anywhere between this 21.39 and a 21.44. Obviously, if we see continued weakness and I'm sorry, that's not the right one. If we see continued weakness and they take out this 21.22, then they may try and form some kind of descending triangle. But if they're going to do a triangle, most likely this 21.22 is going to have to hold. So we're still this is the 5 minutes, so I'm not 15-minute. But we're into the oversold levels here. We don't really have any maybe a little bit of a bullish divergence, not much. But if we take a look at the 60-minute chart, we're just around the neutral. We already broke it came down and touched it and broke it a little bit, and then this was the rally. But you can see the 21.42 is going to be price resistance as well as moving average, and this is going to be the earliest clue that that we're going to see an even larger move to the upside, most likely up to the 21.51. But this is going to be really, really difficult for the bulls to get through because, you have the price support, you have a pivot, and we also have the moving average. And if they do that, then we have the resistance at 21.51. So the bulls are going to have to work to get themselves out of this little hole right here. And like I said, maybe they're going to try to mount something with the Fed announcement coming, which everybody knows is going to be nothing. But again, heading into the elections, I don't believe that there's going to be a whole lot of money that's going to be pouring in to try to defend anything. So finally, on the daily chart, this is that bearish rising wedge. Nothing has really changed on it. If the Bears can push it through this 21.05, there's most likely going to be a panic trade down to the 20.69 or possibly even the 20.48. But this pattern's looking for the move to come down here. But we're not really worried about that. We're just trying to figure out where the short-term moves are going to go. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.